Andrew, how are you adjusting to gravity?
Hello, my friend. Oh
Hey,
my
buddy.
gosh, this is crazy.
Huh?
Yeah, so this
What?
is totally different environment. I'm competing again in the US Investing Championship.
Yeah,
So yeah, trying to put together another good year in a crazy market.
yeah. So, are you trading both sides of the market now? Are you trading the short side or
No,
still
so
long only?
for the most part been trading the long side. I
Yeah,
was able to sidestep a good amount of the action in February, then got tangled up on that Trump, tariff announcement.
yeah,
And yeah, kind of scratching things together, but still doing pretty good for this year so far. So managing.
yeah. So it's not like I was saying before this happened that if, people have just been able to own the spider and go play golfers for years, that's over.
Definitely.
Yeah, yeah, so you have to be a little bit more tactical. It's hard to be long term now, isn't it?
Yeah, I found in this market environment, I found you either have to pick one of two things. You either have to really shorten up your time frame and go to more of like a day trading, scalping mindset, or you have to go long term, which is I've been doing the latter, going more
Okay.
long term with my thinking, and that's
Hmm.
been helping me a lot. But I find like with this swing trading, if you're on like a 1 week, 2 week time frame, that stuff is nearly impossible in this environment.
Okay. Um, has the dollar influenced you on trades? Do you believe that a weak dollar, meaning risk on, is dead? Because we've had dollar weakness and market weakness and bond weakness all simultaneously. I don't know how old you are, but that's what was going on in '87. So if we could put a blow off together and the S&Ps close back above 55, it looks like new highs for me into the summer.
Yeah, so with the dollar, I don't think the dollar cratering like this is necessarily a bad thing
Okay,
because
yeah,
there's a lot of policymakers that have wanted the dollar to go down
right.
for quite a while,
The
saying that the
current
dollar's too strong.
administration. Can you can you
Exactly.
ex- can you explain to me? They got their objectives. They've gotten lower energy, and they've gotten a lower dollar. So, but the lower dollar to help exporters was the main reason. And then the tariffs negate that edge.
Yeah. So this administration, if I can just sort of back up to where I'm seeing this macro picture,
Yeah,
coming into
please.
this administration, I was supportive of their mandate and what they were going to accomplish. And honestly, I was pretty excited about the prospects of what could happen. So I'm in no way, shape, or form some like anti Trump politicized person. But really, it's astonishing. They've completely bungled their entire mandate in the first 100 days. And it's pretty sad. But when he came out with that board of tariffs, Wall Street was
Yeah,
really expecting maybe 10 or 20% tariffs and 20
reciprocal.
reciprocal. And 20% was like the bear case.
Right.
And coming into that, I really thought, hey, the market's already sold off quite a bit. Everyone's pretty hedged into this event. He's probably going to come in at 10%. And maybe you love the tariffs and you think it's brilliant. Maybe you don't like the tariffs, but even so, we can still get by. But when they came out with that board with, the fake numbers based off of a fake equation, based off of analysis by Peter Navarro and his fake economist, that's just an anagram of his own name, they lost all the credibility of Wall Street, all the credibility of all these wealthy donors that put Trump in power to try to make more money. And these policies, like internationally, no one liked them, and domestically, it's almost unanimous that no one liked them, other than like the super mega hard supporters. So yeah, this policy it just made no sense, and
Okay.
they dug their heels in and got to this point where they drove everything to the brink, and then the bond market broke them just a few days ago on the first day that they were going to implement these policies. So, in my
This bond
view,
market, you've been around for a while, Andrew, and maybe you remember your dad's bond market. That if we
Mhm.
had had a 40% sell-off in the Qs and 20 in the spot in SPX, we would have done more than 3, 4 points. We would have done it in a day,
Yes,
let alone a week. This was one of the weakest flight to safety, flight to quality rallies I've seen
very
in my
weak.
lifetime. And now
Yeah, it
look at
was
where we're at. Under 85, we talked about it on the show, and it's a major breakdown for the bonds. They could head to new lows.
absolutely. And I think it's because there's so many competing objectives. Like one of the big objectives is we have this big fiscal cliff coming and a maturity wall of treasuries.
Yeah,
And part of the goal of the administration was, hey, we're going to do Doge, we're going to cut 1 trillion in spending,
yeah,
and that's really going to help us with refining our national debt and keeping our interest expense low. And yeah, with this stunt they've pulled, like as of yesterday, Doge is only going to cut 150 billion, not 1 trillion.
yeah,
And then
it's
now
a
with
little
this
less.
trade war and with bond yields blowing out, like the trade war, if it goes through, like these China tariffs, anyone can see, hey, there might be a bit of an inflation spike as people have to pay way more to produce stuff. So it's like, what are bond yields going to do against that backdrop? And if everyone's expecting 1 trillion in savings from Doge and then they come out and it's only 150 billion, what are bonds going to do against that backdrop? And when,
Okay, let's talk about this
yeah,
backdrop because they talk about the wall of worry. And
yeah,
everything we talked about says there's lots of reasons to sell stock.
yeah,
There's nothing bullish about what we were just talking about.
yeah.
So that's why I think people would be skeptical if we get, I still need 5,500, but that 48, 4,900 level was something I looked for. I still think there's a possibility that we climb this wall of worry and have a melt up, which is, I don't think many people are looking for that anymore. Do you know what could possibly, you have a good mind, Andrew. What could possibly be the catalyst for one more hurrah wave to the upside towards 7,000 S&P?
Oh, yeah, that's my base case and what I'm positioned for in the competition is we are
Okay,
going to start climbing this wall of worry. So everything I just covered is incredibly negative, but here is why I think we will climb the wall
cool.
because all of those bad things I just mentioned, the policy made no sense, blah blah blah, all this stuff that everyone now knows and now everyone is talking about.
It's in the
But the
market.
reality is the market already broke Trump. That happened a few days ago.
Yeah,
Now Trump is in a position that's totally different than where he was even just a month ago. Now he's in a position where he's upset all of our allies, upset all the billionaires, upset many of his supporters, and that's really going to hurt in the midterms. And this is all over policy that no one agreed with. So, how does he win from this? There's no way he wins. So, at this point, he's already capitulated. Everyone in the world knows he capitulated. And equities put in a panic low, and even bond yields. Bond yields are not acting better now. But
yeah,
if
they're
you look
not.
at, say, like the 30-year treasury, we put in a panic low 2 days ago and we haven't revisited that level, even though the bonds are not making a
Well,
miraculous
here's
recovery.
TLT. So far holding. Same thing,
Exactly.
20-year bond. So the
So
same
my
low as the S&Ps. Then
yes.
that's why I'm saying it better hold this low. Maybe we
Yes.
get something like A, B, C. Maybe it is a bottom, but it better not. Just like 4,800 in the S&Ps, under 4,800, I get 35. Is analogous to the TLT taking out 85 that gives you 70.
I'm
So
seeing it the
those,
same way. Those are the two
yeah,
levels that everyone needs to watch. I think those are the two most important levels in the market right now.
okay, all right.
And so
Um,
I
Go ahead.
believe what's going to happen is even if you look back at the COVID crash, the market never bottoms when the whole virus is gone and everything is back to normal and everything looks rosy and picture perfect.
Good
The
point.
market always bottoms when you pass the moment of peak uncertainty. And in my view, the moment of peak uncertainty was right before Trump caved and everyone thought the world could slip into the abyss. My view is we've moved past peak uncertainty. Now Trump is going to be in damage control mode, and what his administration has to do now is they have to start getting some trade deals on the books. Even if they're not wins, they just have to spin them as wins because they have to get things back on track. And I think against that backdrop where the smart money knows that Trump's whole mandate is just completely over and he's got to do this new thing of really just backing out of this trade war gracefully, people aren't going to keep selling on that. That's why I think with the VIX at 40, people aren't going to make money by hedging their portfolios now. That's my
Yeah.
view. I think
Well,
now we could
that's
start climbing that wall of
that
worry.
boat has passed for a while.
Yeah.
Okay. All right. So all reversal weeks here. You know where you're wrong, and people said, "Well, Dale, how do you, this was really just a day. Okay, it was the day, right? It was the tariff delay day. So the whole week's range was made that day. So, people say, "Well, how do you get on board?" And my advice to people was to, you know, do your fib work and look to buy a pullback. And we had pretty good pullback after that day. It may have been 61% of this or halfway back. So that's what you
Yeah.
do. You're wrong under here. You add on over 5,500, and I think that it could be very fast. We could have 3, 4 months of just people at first being caught flat-footed or short or afraid, and we will have some euphoria at the highs. Um, can you think of what would be give the market a sense of euphoria? Would be um, maybe President Trump and G come to terms because he wants TikTok?
Yeah, I think if something like that happens, which will eventually happen, I'm not of the view that we're going to rip back to new highs in the market.
Okay.
I think the risk reward from here is good. And I think with
Oh,
the
okay.
VIX at a 40, I'd probably be a seller. Like if the VIX gets to like 20, somewhere around there,
Okay. Good
that's where
guideline.
I wouldn't be overweight anymore because yeah, there still is uncertainty. You know, there still is the potential inflation spike. We've got the maturity wall coming. I think there's a lot going on, but what's going to happen is over the next 90 days, think about it. This morning we got some China retaliation on the trade war and equities are not going down.
Yeah.
That is the huge tell that this is all priced in at this point. If you're getting bad news and the market's not going down, that's the market sending a message. But with that said, what I think is important to look for is if we start to get like, okay, the panic whoosh lower is over, and now we're in a new phase of really just dealing with reality, we should start to see when earnings season starts, some companies decoupling from the indices. And what I mean by that is right now, every stock is moving in tandem. So you've got, all correlations have gone to one. Everything's bouncing together or selling off together. But when earnings season comes, there's companies that are not even impacted by tariffs. So when those companies report earnings, they're going to say, "Hey guys, tariffs stink, but look, we're Netflix. We have an asset light business. We don't sell physical goods. Tariffs are not really a thing for us." There's going to be companies like my big position right now is Uber. Uber's ride
Yeah.
sharing. Uber's not in the business of physical goods. They're not going to be
So,
as impacted by tariffs.
okay, that brings me to a theme that uh, go with what's happening, and you're going to want to buy domestic stocks like small caps, the Russell against a spider. Maybe the Russell finally starts to perform better because there are more companies, although a lot of them are banks, but concentrate on U.S. companies that don't need anything from China, like everyone else.
Yeah, like that Russell 2000 has gotten decimated because the whole idea is like these companies are more levered, lower quality, et cetera, et cetera. And I believe it's like 30% off the highs. But there's definitely small cap companies that are not international and have no exposure to tariffs. Maybe it's a software business, asset light, not
Okay.
impacted. And those kinds of companies, I think during earnings season, when they report and people get out of this malaise of just the shock and awe of what's happened, maybe those companies do good. And then I also think the companies that, hey, you find out, this company's really impacted by tariffs and could get really hurt. I would expect there could be some shock in those too, and those really decline.
Okay. All right. So, what are you doing right now, Andrew, with, your celebrity that, you've been doing this for a while, these trading championships, and I'm sure people want to learn how they could do what you do. You have any kind of business model that you're working with?
Yeah, I have a Substack that I write every single night, which is essentially just me doing my own research and publishing it.
Right.
And that's the main way to kind of see my work, see what I'm up to, that sort of stuff.
Okay. And best place for people to, get a hold of you is on Twitter at Pristine Capital.
Yeah, Twitter at Real Pristine Cap,
Real.
and
That's
then
right.
pristinecapital.substack.com.
Okay. And what was your biggest position going into this quarter right now? Uber.
Uber.
Okay.
Yeah,
Let me
Uber's my
pull it
big
up and
position.
let me just pull it up and take a look at what you're seeing. And is this long term? Because you said you're approaching it long term. So how did it handle the sell off? There it is. Yeah, that's rebounded pretty good.
Yeah,
That's a
so I think
4 hour.
this is the next theme to look for. Which companies are not as impacted by tariffs? And do investment managers start to nibble at these companies and buy? What we don't
Okay.
really want is like this continued everything has a correlation of one and it's all moving together. With Uber, I'm starting to see that decoupling where Uber doesn't look like a chart that's crashed. Uber really looks like a
No.
range bound stock throughout
Yeah.
this whole madness.
Yeah. It
So yeah,
held the.
Uber,
It held.
this
It
is my
didn't
big
make new
trade.
lows. Okay. It looks good. Let's take a look at a weekly. Where did you get on board?
Yeah, so I got on board really in this chop zone that we're in right now. I have a bunch of executions in this chop zone, and I got one execution on that panic low. So on this trade, I'm about break even, nothing too crazy, but I'm betting that in the weeks to come, if we end up getting this big equity bounce, it should do
You're
well. I
getting
see
some
someone in the
odds.
chat said, "Are you worried Uber getting competition from Vimo and Tesla?" What I like is that Uber, I think, is in a very unique spot. They actually have a partnership with Waymo. So whoever wins in autonomous vehicles, Uber can just partner with them. And that's what they've been doing. So yeah, I think Uber, their mobility business is doing really well and it keeps growing. They're not really impacted by tariffs. They can win in autonomous vehicles. And then if you think about it, if because of the tariffs it becomes more expensive to manufacture cars and that leads to car prices going up, then ride sharing becomes more attractive. So I just think Uber, that's the reason why that's my big trade. I just think there's a lot of ways to win on this stock. So that's how I'm positioned.
Okay. I think it has 90 in it for a third drive. That's my
Yeah, so we'll see what
quick
happens with the
analysis
earnings
there.
season.
See what happens up there. But yeah, so you have one, it's just a formation I teach people for years. This is a confirmed high. This high did not confirm, it diverged. And this high, unless we blow through 90 and get an overthrow, would be a three drive formation to a top. So I'd at least book partials up here.
Yeah.
But what do I know? I've only been doing it 150 years. So Andrew, great talking to you, and I knew I'd get some perspective. So we have, if you ever wanted to have a wall of worry to climb, It's the steepest one I've seen in decades.
Absolutely. We've got clear levels to trade against on the downside. We have those capitulation lows that can be great
Yeah,
for stops in case things change.
yeah, yeah, yeah. Expect anything and everything,
Yeah.
especially now. All right, my trading warrior brother Andrew O'Connell, everybody. Find him on X at Real Pristine Cap and read his stuff because you'll be reading material from someone who's won trading championships. It's not easy. A lot of people compete. Okay, so good luck this year, buddy.
Thank you
Rooting
so
for
much.
you. Maybe you could do what the Chiefs couldn't do and get a three-peat.
That's the goal.
Okay. All right. Glad to be watching you. You've got an
Thank you so
audience.
much.
All right, Andrew O'Connell, everyone. And
Take care.
take care, Andrew. And that's a wrap, everyone. Hope you had a good week. And remember, don't just count your pips, count your blessings. And you could join the team in 20 minutes for the morning edge and take advantage of that offer. And when Blake says it's never been that cheap, that's it. So they had a good month this week in the room. Thank you, Donna. So, adios, everyone. Have a great weekend. Don't just count your pips, count your blessings. See you guys.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.